This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Meniane on the show to talk some IPOs. Jake Wujasek from Trend Spider. We have a breaking news.
What is up, everybody? Happy Thursday, and welcome back to another episode of Benzinga Live. I'm your host, producer AB, and we've got a packed show today. I've got my man, Stephen Hode, the Stop Hunter, hanging out backstage. We're going to bring him on in a couple minutes. We're going to look through some charts. You may have seen him this morning as well on the early morning market watch with the Stop Hunter. That was a good show this morning. So if you haven't tuned in yet, we're doing it right before pre-market prep at around 7:30 a.m. Eastern. Right now, Tuesdays and Thursdays. If you weren't here this morning, make sure to tune in next Tuesday. All right, so just quick overall view of the overall market. The S&P 500 is coming back here a little bit. We were down to about the 410 level, now closer to the 412 level. Been moving up since about 10 a.m. Eastern. Tech, your Qs are in the green, actually leading the way, have come all the way back from around the 324 level, now around 326 on the Qs. And then the Dow Industrial Average is still down about 0.7%. So tech's certainly your leader today. The S&P 500 coming back, the Dow still lagging. Of course, we can look at energy and the financials today, both kind of, dragging the Dow down. But without further ado, let's go ahead and bring the Stop Hunter himself on. Let's give Steven one of our very special Zinger Nation welcomes and see what charts he has teed up for us. Steven, long time no speak.
Yeah. Hello. Good afternoon.
Good afternoon. How are you doing?
Yeah, not so bad. Busy trading at the moment. It's been a busy start, bit of a mixed bag, but like you just said, the tech stocks treating me nicely this morning. So,
yeah. So, what specifically? Any specific tech stocks that you've been watching?
Yeah. I've been all over Amazon, Palantir, AMD, Google. Let me just bring up the charts. Let me just drag something in for you.
Yeah.
So, lost my window. Hang on one second. So yeah, no, that's interesting start. So there you go, Amazon. I don't know. Can you see Amazon there on the moment?
Yeah. Let's get it pulled up. Let's go full screen on it for a second.
Yeah. So it's the start of the day. Been doing very nicely, pushing on up. Bit of enthusiasm coming back into them at the moment, so that's nice to see. Another one, AMD off a bit. It's been on a tear up for the last 5 or 6 days actually, so it doesn't surprise me that it's just calming down a little bit. And then we've got Google. They mentioned the AI word and announced all their developments in that space, and you can see they gapped up this morning, and then I've been pushing up and just holding around $118 at the moment.
Yeah, I mean, Google's been on an absolute tear ever since, it had that big dip when the, Bard rolled out and people were like, oh my God, Microsoft and ChatGPT is so much ahead of Google, and it lost like $100 billion of market cap in 1 week, and then has been on kind of a tear since then. I mean, still though, when you look at Google's like all-time chart, we're still well off the highs.
Oh yeah, sure. Yeah, let's see if we can have a longer term look. There we go. So yeah, the thing is, it's a nice sleeper stock. It's one of those big ones that people have not forgotten about, but sort of left on the side. And like you said, now look, you got bag loads of value left in that up to the highs 150, 151. So plenty of room still in. Looking at the Fibonacci's there around that, you can just see, I don't know if you can see that there, that bar, if I just make it a bit bigger, just hitting off the Fibonacci line there. So bit of resistance at the 117, 118 level. So Next stop 125, then 137. I'll be looking at there. But yeah, definitely one that I think's got some good short-term gains in there.
Yeah, I mean, Google will just be, I think, like continue to be. It's just tough right now because AI is so new that I think people are looking at Microsoft as the leader, but Google's like a massive, Google's not, I don't think, going to just let AI slip away, right? Google's going to be a player in AI, but not even just its AI play, like all its other parts of its business too, seem to be doing decently well. I know there's been some questions about like the advertising side of the business. If we do head into more of a recession environment, but for right now, I mean, it seems like Google's doing pretty well.
Yeah, definitely. I've just pulled up Microsoft on there. Sorry about the squiggles. I've obviously been doodling on that one before, but you can see it broke up Microsoft, but a lot further ahead than Google at the moment. And it's this sort of, I call it a resistance line area zone, which is around the $300 mark before it can get up to the 350s. But that's done, a lot more. Looking at the shape of the thing there, maybe have a little pullback and then head off into there first. But yeah, those three this week: Google, AMD, Amazon, being very nice. And the other one was Palantir. I don't know if you know much about them. Another 8. They mentioned they had their earnings last week, up 19% on the earnings announcement. Another company that said the AI word in their post match analysis of the earnings, and that has rekindled what was a not call it a meme stock, but one of those popular stocks that was out there to trade.
Yeah, it certainly was a retail favorite for a while. I mean, I've never been a super big fan of the stock or the company, but it did gap up, like you said, on earnings and seems to be back in favor among a lot of investors.
Yeah, definitely. So, it's made me a few pounds this week, so I can't complain on that. The earnings, so it's all good. I'm just trying to zoom in if I can't, and turn off the drawing thing just to show you that it's not turning off.
And then what about, Steven, some other areas outside of tech? I mean, I mentioned that energy has been a little weak. I see we've got the crude chart pulled up right here.
Yep. I was saying earlier today, last week we saw it go under that range, that 71.83 range, where it's been since November of last year, and it's looking like it was pushing down towards the mid $50, but then it's just sprung back up the last few days and back again within that range again. A lot of uncertainty in there about which way it should push. We had Chinese numbers out this morning that were a bit disappointing, or at least showing that their economy was quite flat. So that's where a lot of the demand comes from. So that wasn't a great sign, but then there's lots of other bullish indicators out there. So it's a mixed bag. Also, I think you're going to see more of these little wider range swings there at the moment on that chart.
Yeah, I mean, and then do you have any specific, energy names? Oxy, Exxon? Do you like, or do you just kind of more watching the actual oil price right now?
Well, for example, I'm going to try and pull up XLE. For example, is a sector, but I sometimes trade that one, to give me more of an energy picture. You can just see a bit weak this morning. The US dollar as well, by the way, off that Chinese news, got stronger as well, which you can see would have weakness into the market there. So it's just pulling off, XLE. But names, Conoco, Phillips. Just trying to look down my list here, see what I've got on there at the moment. There you can see these are all the stocks that I'm checking out. LNG, liquid natural gas, Cheniere Energy.
Yeah, Cheniere Energy. Yep.
Yeah. Scrolling down. I did delete a few off because I'm normally bullish the stock, so I have some different strategies, some like arbitrage type strategies, and they were looking weak. So we got another one here, Marathon Oil, pulling off again. weakness across the board. There's a similar chart pattern across most of these oil stocks at the moment. Devon Energy, another one. Again, similar type pattern.
Yeah, actually, I haven't heard about Devon in a while. I mean, I know that was certainly a hot one a while ago. So, right now, Stephen, I mean, we're at this spot. I know you mentioned interest rates moving a little bit higher. Was that in England, or is that in was that the European Central Bank?
No, that was UK today. 12 o'clock went up to 4.5%, which is the highest since late 2008. They reckon there's another 0.5% up in there still to come this year over here, and before, like Powell says, it starts to calm down and maybe take some quarters off the number later in the year. But like he said as well, they're going to watch it as it plays out. So you just don't know. But yeah, it went up this morning. Strangely enough, though, the FTSE 100, which is the main index here, has been reasonably strong. It just started to slow down a bit, but over in Europe at the moment, markets like the DAX, CAC, which is the French stock exchange, the FTSE 100, all been pretty, not bad, considering the economic climate behind it all. So, UK interest rates. I don't know what the Europeans are up to at the moment. Chinese ones, I think they actually came down a notch. They've almost got a deflationary setup going over on there. So it's one to keep an eye on.
Yeah, it seems like, that the overall, I mean, the market right now, at least in the United States, like it seems like it's been kind of range bound, kind of in this, like the S&P 500 between, or the SPY between like 400 and 420. It hasn't really done much. And I think it's like you said, like there's the economic backdrop has been, okay. And there's all this fear about interest rates that has been kind of muting whatever the potential returns would be right now.
Yeah, that's what you say. So it makes it an indifferent market of, it gives you opportunities in either direction, mind you. A bit of a volatility if spikes in the the plays, but yeah, like you say, there's no set clear direction at the moment. So it's you take your chances, on where it's going to head.
Yeah, and then so I mean, does your trading strategies how are they different? How are your trading strategies different in an environment like this versus, say, in an environment like 2020 when it seemed like everything was just going up every single day?
Yeah, I look for the stronger markets and pick on those ones at that time. So I'm a multi-asset trader, so I'll jump in between, say, Forex or stocks or commodities, whatever's hot at the time. I'm going to find it. Also, what's cold, and I'll short it as well. And I, get a short list of stuff I want to trade, and then I've got various types of strategies. Loads of sub strategies that will then trade around what's there at the moment. Also, a lot of portfolio, risk management, sizing stuff that puts more weight on the hotter stuff, and the less likely to win, scale down, go smaller, but still have a few trades on there in the background. So it's a bit of a juggling game, of portfolio management as well to get out a decent return.
Got it. Yeah, I mean, I'm always curious about that because it seems like in a market like this, like some day traders love it that it's kind of choppy and seems to go up one day, down the next day. I think other people find it hard when there's no set direction to find trends and end up getting kind of chewed up. But so it's always interesting to see how people kind of shift their strategies in different environments.
Yeah, I'll also have things like breakouts, trendings, reversals, all going at different time, at the same time and different times. So, I'm not set on just one approach, which I think helps. Well, it's helped me anyway, my trading over time.
Yeah. So what about from outside of trading? What about from like an investing perspective? I mean, do you change anything with how your long-term investments are set up?
I buy houses. So I don't property. Over here in the UK, it's still a good market to be in. So in terms, I'm really am just a short-term trader, and I generate enough in that, at any given year to live nicely off that. So I don't.
Yeah. Well,
Yeah, long term. Yeah. Sorry.
Go ahead.
I was going to say, from a long-term perspective, I like things just to be sitting in the background and not doing a lot. And like I said, we're on a small island here, and there's only so much space. So in theory, there's more people coming in. So in theory, house prices should still stay buoyant. So that's where my pension comes from.
Yeah. So is it similar? I mean, in the UK, I mean, like the housing market, is there like kind of a shortage of actual supply?
Depending on location. In the southeast of the country, massive demand, and that's where you'll see the faster rising house prices. Or if there's a certain reason you have to move to a certain area in the country, maybe there's a government initiative, an enterprise zone or something like that sparks a bit of a rally. But most, I suppose, the bigger part of the market, obviously London's huge market, huge demand there. International as well, you get a lot of Chinese, and we did have a lot of Russian buyers in that space. But outside of that, the southeast and the south is heavily in demand all the time, and we get more. The population's growing, a lot more people moving into the country, so they can't build enough. The property developer stocks, the building, home builders over here, they're worth a good look at if you're trading stocks over here.
Okay, good to know. The home builder stocks in England. Is it similar though that like if interest rates keep rising, then it'll increase the cost of borrowing to own a house, which could hurt demand?
Yeah, that's what they're looking at the moment, because like you saw, I said, and if you're watching this morning, it's been about 10 years since we've seen these sort of levels. So it allowed a lot of people, on the ladder into the market. And now those that couldn't quite afford it may be starting to feel the pinch as the house prices still go up. And, those mortgage rates and the bills and everything associated with that are also following them up, and wages aren't increasing at the same rate. So, it could be interesting if they kept going up. They'll certainly squeeze a whole bunch of people out the market. And then I suppose they move into, the renting, possibly. There's a big market for that, out of that into renting. It's a very popular market to be in over here.
Yeah. All right. Well, Stephen, thank you for hopping on. I mean, I'm always always great to chat with you. Like I mentioned on the top, for our audience out there, if you weren't there, or actually, sorry, we have a couple more minutes. I mean, do you have any other charts that you want to talk about that we haven't gotten to?
What could we have a look at? We looked at oil. You got the Nas. Well, I was going to say we could look at the top performers globally if it loads up. I was looking at this nice spider chart for the year, and just pointing out to the viewers this morning that the big winners of the morning, of the year so far, I'm having a few loading issues here at the moment. You can't quite see it, but it's the Nasdaq and the Russian stock markets up there at the moment as the big winners of 23 so far. And Nasdaq, there's the chart here. Again, it's just hitting buffers 13,500. It's had a nice, move on up from November time. Got to get through 13.5 before it looks at 14.25 and early 15,000s. So that's another interesting one to watch. And just, I suppose, briefly, US dollar, just talking about the Chinese impact this morning. You see the spike, the bar chart there, that was off the news. It's driven back up. US dollar getting a bit stronger. Currency pair, if any FX traders out there, got the euro dollar here. That's the world's biggest currency pair, with all the trillions traded every day. And it's looking like the euro's weak, and it's breaking down below this level into this, zone. They call it moving back towards parity. But that could be an interesting trade to watch as it breaks through that yellow area range back into here. So something else
Yeah.
there.
And I mean, the price of the dollar falling could, or sorry, this would be the price of the euro falling against the dollar.
Yeah,
Got
correct. Yeah, that's the
Got
euro getting weaker, the US dollar getting stronger. The first currency is the one you look at for the direction. So if it's going down, that means the first one's going down. That's how I think about it anyway. But yeah, that it's dollar strength, and I don't know, Japanese yen, Swiss franc, another couple of interesting currencies to look at against the US dollar as well at the moment. But yeah, that's why I've got an eye on the euro dollar. I think it's about 20% of the market. It makes a big part. If you're looking at the dollar index, which is this guy here, that's a basket of currencies, the biggest chunk of that is the euro. So essentially you're playing a sort of a euro game in there as well, but it's made up of Japanese yen, the pound, Australian dollar, Swedish krona, a whole load of things. So it's a good benchmark, that one. I like to watch.
Got it. What do you think about the whole, I mean, like BRICS thing going on? Like, you think there will actually be momentum from countries trying to move away from dependency on the US dollar?
Yeah, I agree with you there, Aaron. It's building up the momentum. I think they've got some conference or something in South Africa soon, where I think Putin was even trying to go there, but they told him not to turn up, otherwise he might get arrested. But they
or worse.
Yeah, it could be worse. Yeah, but you've got some big countries in there. India, Brazil. Obviously China, and a lot of other these. You've got the Middle East countries like Saudi Arabia talking of joining. A lot of South American countries, and what you got to remember, a lot of these emerging countries are funded by US dollars. So if US interest rates go up, then they get whacked. So a lot of those South American countries might struggle. So I think they're trying to alleviate some of that pain by trying to switch to the Chinese setup, which is being introduced. But it's in the news all the time, and it looks like it's gaining momentum. It's almost like the old Cold War of the 70s, 80s. It's now BRICS versus Europe and the US. It seems in the new sort of world economic order.
Yeah, I think it'll be interesting just because, I mean, there'll be there's been discussions in the past about the world kind of moving off the US dollar, and it's, I don't think, ever really happened. I mean, I know one of the biggest hurdles right now is that oil is still, priced in the US dollar, and that's how, probably the most important world commodity that people are trading and buying every day. So, but certainly will be an interesting kind of story to watch, because there will be some ramifications if that does end up happening in terms of the US dollar and what that means for the economy.
Correct. The G7 finance ministers are all meeting in Japan for the next 3 days. And I think you'll find they'll be trying to probably come up with some sort of plan to alleviate, this, thing we're talking about now with the Chinese and the BRICS. What's their new policy going forward, and how they're going to counter, potential push on the US dollar.
Yeah. So, I mean, like, excuse my ignorance, because I don't trade Forex that much. Do different currencies trade off of will there be like big swings in the currencies based off of what's going on at this G7 summit?
The G7 summit's it's not that important.
Okay.
The big swings you'll see are like non-farms on a Friday, 1:30. That's 1:30 here. Interest rate moves. They're for your day trader, intraday trading. Computer pounding traders. Those type of events. The bigger events get factored into the longer term picture. So that one, the G7 thing, I think is more of a long term factor into the prices. And Forex market is actually the least volatile market out there that you can trade. So a big day in an FX pair, like this euro US dollar pair, 1.5%, 2%. Then you compare that to a stock or stock market, then it's not the most volatile. So that's why people focus in. You see all these decimal places on FX down to the 4th decimal place. That's what they're focusing on. Those, call them pips, down at that end of the spectrum to where they make their money. In terms of daily volatility, there's not much in there.
Got it. All right. Well, Steven, I mean, it's been great to have you on twice today now on Benzinga. We're lucky enough to have the Stop Hunter on. Like I said, if you guys did not tune in to the early morning show, make sure next Tuesday, 7:30 a.m. Eastern, hop in because it's a great way to start the morning if you're looking for trade ideas, looking for just to kind of get an understanding of what's going on and what happened overnight while we were sleeping over here in the States.
Yep, yeah, definitely. Yeah, join me. It's that wake up call. Get your day up and running. Leading to the other shows that you're producing, and get some trade ideas out there. Hopefully, make you some money.
And Raz is asking the important questions in the chat. He said, "What's his take on chips?"
Chips, as in fries or chips? Is that what he means? Or
as in
semiconductors.
I think. Oh, that's a good question. I was thinking about the food. But I guess he could have been talking about this. He could have been talking about the stocks as well.
Yeah, I don't know. He's not. Is he following up? He says, "What's his take on chips?" Yeah, well, we call them something different. We're talking food. We call them chips. Fries. That's our fries and crisps.
Same thing, though, right?
Yeah.
Oh, he was talking about semiconductors.
Yeah,
I was wrong.
Yeah, it's a good sector. Like I said, AMD, like we just said earlier, it's been great for the last 6 days. Nvidia's been, great since the start of the year. There's some other ones like Taiwan Semiconductor. That's been struggling. I don't know why. Last few weeks. I don't know if I can put up a chart on that one just very quickly.
Yeah.
There we go. Let me put it back to the weekly and remove all the drawings. So yeah, that's one of the bigger players out there. You can see, just heading down a bit. Whereas like your AMDs, Nvidias are still being that way. This one's going in the opposite direction. Don't know why. On the fundamental side, why it's doing it, but still as a sector. I'm still all on it. I think it's, you use semiconductors and everything, don't you, these days? Yeah, all these chips, from your PC to your car, your electric vehicles, everything. So there's huge demand out there. They're sort of getting through the crisis that they had. So, yeah, I'd be bullish. Chips.
I've actually been looking to add Nvidia like in my long-term investments, but I've been waiting for some sort of a pullback, and I'm starting to think maybe I shouldn't wait for this pullback. Maybe I should just hop in, because I don't know if it doesn't seem like it's coming, or at least any super significant pullback on Nvidia and AMD. But that is interesting, Steven, because I didn't really realize that TSM wasn't following along, wasn't joining the party with Nvidia and AMD, and it's been kind of lagging. So, which is, TSM actually manufactures and produces all the chips for these companies. So, I wonder if some of that is, investors weighing in some potential risk with Taiwan and China and what's going on there. I know there is some movement among, United States to try to move away from dependency from having everything in Taiwan, just because, like you said, semis go in everything now. So to have such an important part of our economy based essentially fully in Taiwan can be somewhat problematic from a national security standpoint. But for right now, TSM is still by far the biggest player in the game. Yeah, so that either means there's a good bit of value in there for you, to the upside, or like you said, it's that Chinese factor that's, holding it back. But then here's another one I just saw down there in the comments, INTC Intel. Again, that's not exactly, I suppose exciting either, really. You've got this bottom in here around $24.50. I'd expect, you could be looking, if it breaks in through early 30s up to 41. But again, last few days when the other stocks in that sector have been hot, not doing anything. So, yeah, there's some interesting digging and research to be done there, I think, on why they're not correlated to the sector as a whole. Yeah, very interesting. It's always good to find these kind of discrepancies within an industry, because oftentimes there's some sort of clue as to something that's going on there, or one name to like and one name to maybe not like as much.
Yeah,
So for sure, I mean, the semi industry will be one as AI grows. I mean,
yeah,
that's really the biggest beneficiary of the whole AI boom so far has been the semi industry. So we'll for sure be watching these different semi names.
yeah, definitely, definitely, is a good market to be following.
All right, well, appreciate you, Rich. Dropped off to give us 2 likes. Thank you, Rich. All right. Well, Steven, again, enjoy the rest of your Thursday. I know it's getting
Thank you very much.
a little late where you are. Maybe time to head off and have a beer and some dinner.
Well, I was thinking of hitting the driving range, but as we speak, a thunderstorm's just rolled in, so I'm not going to go out there with my metal shafted irons and get electrocuted just yet. So I think it might be the beer option instead.
Yeah, there you go. Well, hopefully the weather clears up. It's starting to get real nice up here in Michigan, so I'm definitely going to be trying to golf as well this weekend, sometime over the next couple weeks. So, excited about that.
Yeah, definitely. Yeah, I can't wait for it. Yeah, the sun to turn out and I can hack my way around the golf course again with much frustration.
No, from what you've said, it sounds like you're a pretty good. What'd you say your handicap was? Like a 7 or something? 6? Yeah. And
Yeah,
it's
but,
certainly not a hack by any means. So, all right, Stephen. Well, again, enjoy the rest of your Thursday. We'll chat soon. And again, next Tuesday, 7:30 a.m. Eastern. Be there, be square.
Yeah, I'll see you all there with a cup of coffee and ready to go. Thanks, Aaron.
Beautiful. Thank you, Stephen. All right, guys, that was Stephen Hode, the Stop Hunter. Again, been joining us in the morning for an early morning wake-up call. You guys should tune into that. Really get you all the information and get you refreshed, ready to go, heading into pre-market prep and the rest of the trading day. All right, real quick here, let's see if we have any big movements in the overall market since we've been live. S&P 500 has come down a tiny bit. Qs as well seems to be coming down just a little bit. Dow Industrial Average now down about 0.8%. So the whole market has kind of sold off a tiny bit over the past 20 minutes or so. Here in 15 minutes, we'll be speaking to David Meniane, the CEO of CarParts.com, ticker PRTS. So excited for that. Always great to catch up with David and what they're doing over at CarParts. Yeah, exactly. Get yourself a pint. Sorry, guys. Give me 1 second. Just getting my Benzinga Pro pulled up. There we go. Drop some tickers in the chat. I want to know what you guys are trading and watching. You know what's been pretty strong over the past couple weeks has been Netflix. Let's go to a daily chart here on Netflix, and just look at this over the last. Really, since last summer, July, we hit a low of about 166, hit this triple bottom, which this right now, while the market is still kind of recovering and still not great, finding charts like this where you've hit a bottom now multiple times, from May, boom, June, boom, again later in June, in July, and then you start to come up. We've pretty much all we've done really is just filled this gap to the upside. Now we're in this range where if you go back here to in February 2022, we were stuck kind of in this 400 range for a while. We're heading up to this, which I suspect will act as some sort of resistance. But then from there, I mean, you have a lot more to the upside to go from a technical analysis standpoint on Netflix. I think it'll just take us a while to get there. I mean, this thing has been on kind of a slow churn upwards. You can see that on the downside. This is the old adage that people talk a lot about in trading and especially in technical analysis, is you'll take the elevator to the downside and then the stairs back up. So on the downside, we had these quick, huge drops. I mean, this one down 22% on an earnings report. This one down 35% on another earnings report, April 20th, 2022. I remember exactly where I was for that. I was actually at CCC in Miami at the Fontainebleau when the news hit about that earnings report for Netflix, and the stock went down 35%. And that felt like really like the low of the lows when it came to, tech overall over the past couple of years. Was, when was that? April 2022. So I guess from there we still had a ways to fall, and it actually got a lot uglier. October 2022. I don't even honestly remember it being that bad, but we got down to, what was that? We got down to 255 up to 325 now. So yeah, I mean, shout out big tech companies that have been pulling us out of this mess in terms of just the big sell-offs. What do you think about Hood's new 24-hour trading? I don't know. Let's see what Benzinga Pro has to say about it. And this is what I love about Benzinga Pro, just being able to go straight in here and find everything I need in terms of charts, news, alerts, etc. I mean, Hood has just been so ugly and beaten up for a while. I'm really not into this stock, although I will say from a technical analysis standpoint, it does look like we may have, found what could be a bottom, a consolidation standpoint. If anything else, if I were buying this stock right now, it would probably be as a potential buyout target. Robinhood market shares are trading high after the company reported strong Q1 results and announced 24-hour trading on weekdays. So that's pretty significant, because if you think about that, Robinhood makes money off of how many active traders there are and how many active trades these traders are making on any given day. Expanding that window that people can make those trades to 24 hours should just increase how much money Robinhood's making. I don't know if it's an exact correlation and how easy that is, but it seems like that could work out well for Robinhood. Bitcoin's been showing some weakness ever since it got back up above 30,000 a couple weeks ago. Right here, to me, the chart doesn't look great. I said this yesterday. It looks like that you could potentially be setting up for a head and shoulders if we get a little bit lower here. If we get back down to the 20 or 22,000 level, another little move to the upside could be a little head and shoulders-y, and then maybe move back down. But I'd be looking to buy Bitcoin if we got down around 1510 again. But up here above 20, I'm not really that interested in it. ETH, pretty much same thing. I mean, if ETH gets back down to about 1,000, I'll start getting more interested in it. But for right now, I mean, it's still, to me, a little bit overpriced. Coinbase has been in some hot water over the past few days after it announced that it classified the Pepe coin. I don't know if it took it off the exchange or if it just said that it wouldn't be. Let's see. Let's pull up the article. I don't want to. Coinbase calls Pepe a hate symbol, prompting calls to boycott the exchange. So an email sent out to Coinbase customers describing the Pepe meme as a hate symbol co-opted by alt-right groups has drawn significant ire from the Pepe meme coin community. Prominent crypto influencer Borovic.eth shared a screenshot of the email newsletter from May 10th to his 96,000 followers, which cites a 2016 decision from the Anti-Defamation League, the ADL, to place the frog-themed character in its database of online hate symbols. Why is the Coinbase sending out... Or sorry, here, I should just share this so we can... Little read along. Why is Coinbase sending out emails telling people that Pepe is an alt-right hate symbol? What you should know about Pepe, the meme coin of the moment. Pepe, which was issued around 3 weeks ago with a comically huge supply of 420 trillion tokens, has been leading the meme coin activity. The token is based on the Pepe the Frog meme, which first surfaced on the internet nearly 20 years ago as a comic strip character. Over time, it has been co-opted as a hate symbol by alt-right groups, according to the ADL. Fans and holders of the frog-themed meme coin were outraged at the description of the token, sparking calls for Coinbase to issue an apology and users to start deleting their accounts with the crypto exchange. How do I say this word, chat? Pseudonymous? Pseudonym? I know what it means, I think. I don't know how to say it. Pseudonymous Twitter user and Solidity developer Kenobi declared that Pepe is not a symbol of hate and that he would be moving funds to the United States-based crypto exchange Gemini as a result, completing his tweet with the hashtag delete Coinbase. Pepe is not a symbol of hate. Brian Armstrong, the Pepe community demands that you retract your vulgar statement about the Pepe coin. The hashtag delete Coinbase has hit the trending bar of Twitter with more than 14,000 tweets in the last 2 hours and counting, according to the data from Tweetbinder. Since Binance listed the token for trading on May 5th, Pepe holding members of Crypto Witter have been asking leaders from a number of crypto exchanges to list the token as well. I assume this is supposed to be Twitter and not Witter. Maybe I'll write something to the guy. Coinbase has not made any indication of whether it intends to list the Pepe token on this exchange. Sounds like it's not going to, but maybe to try to get all these people back. Pseudonymous. 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 I'd be confused if I was Pepe, the football player. Yeah, I mean, like, so here's the thing, is I think, like, I don't know enough about this Pepe coin. I will say, from what I have seen, it seems like it is a lot of more kind of 4chan, alt-righty people, which I know that's where, like, the Pepe meme got really popular in the first place. There's actually a documentary about this. What's it called? Feels Good Man. 2020 documentary about Feels Good Man. And this is actually a good documentary if you're interested in this in this topic, where, you know, and the documentary takes you through the whole history of the Pepe the Frog meme and how it was just kind of this innocent comic book character and how different groups over time have co-opted it. And so I think it makes it difficult, you know, like, I don't know the people who started Pepe coin. They could be, you know, the most, you know, normal people ever that are just into this specific meme and wanted to make a meme coin, or they could be somewhat associated with these other groups that have co-opted the meme. I have no idea. The point is that I think people are. Oh, I thought you were trying to say pseudonymous. Is what a universal thing or a U.S. thing? The Pepe the Frog thing. I think specifically a United States, like, political, like a very 4chan type of. I mean, it was around 2016, 2017, like when Trump first got elected, and there was a lot of, you know, kind of social media stuff that was less than ideal, I think, for a lot of different social media companies. And so there is a whole history there. So, like, I understand why. But again, I don't know if the coin itself, like, I don't, like, let's try to find some more information on the actual Pepe coin. Like, do they have a website? All right, so they have a Twitter. Official cryptocurrency of yeah, so I think they're trying to wait, I'm confused. There's a lot of hate coming from Pepe right now. We at Pepe Coins would like to make it very clear that we are an entirely different project with a vision and ideology that is nearly 100 degrees opposite of that of Pepe. Okay, so now this is getting a little bit more confusing for me. So there's Pepe Coins, and there's also a different. Oh, okay. Pepe coins. All right. Someone just tell me if the Pepe, like the crypto itself, has this sort of, association or not. Why? I mean, do they have a real website or is it just a Twitter account? Doesn't look like they have a website. How can anything, any like group, not have a website in 2020? So Pepe coin, is there like an about? What is Pepe? Pepe is a deflationary meme coin launched on Ethereum. The cryptocurrency was created as a tribute to Pepe the Frog internet meme created by Matt Fury, which gained popularity in the early 2000s. Okay, so the way the words of this, like, it makes me like feel like, okay, they're latching on to the Pepe meme of the early 2000s, not one of like the 2016. The project aims to capitalize on the popularity of meme coins like Shiba Inu and Dogecoin and strives to establish itself. So I really like this about meme coin is that they're not saying, oh, we're trying to be like the future of money or solve this problem or that problem that doesn't really even exist. It's basically just saying this project aims to capitalize on the popularity of other meme coins. It's basically saying, hey, look, we saw other meme coins like Shiba Inu and Dogecoin go crazy. We want to do that too. We want to be the next one. Which I just appreciate that transparency and candidness from the Pepe community. Either way, so there's gonna be, I mean, this has been the hottest meme coin over the past, I don't know, couple weeks. But looking at the chart here. We've gone up from where were we at? May 5th was my birthday was the day where this thing ran up the most. Jay in the chat is saying that the coin that Pepe drank too much tequila on Cinco de Mayo, but was up at 38 cents, now down to 16 cents, so almost cut in half from there on over the last week or so. Alrighty, y'all. It is 12:30, noon 30. Here on the east, here on the Eastern time zone, up here in Detroit, Michigan. Quick check on the overall market before we get to our next guest. The S&P 500 is coming back a little bit, down only 0.2% at this point. Your Qs back in the green on the day, up 0.3%. The Dow Industrial Average still lagging on the day, down about 0.7%. But overall, the market's recovered from earlier lows. All right, see ya. Have a great lunch. Jesse Hernandez, what's up, Jesse? Jay Rice. But all right, without further ado, it is 12:31 p.m. Eastern. I'm here with my man. Little drum roll, please. Do we have something? Let's do let's get one of these.
Do it! Just do it! So just do it!
Mr. Hot Stocks Luke, how you doing on this Thursday?
Doing well, Aaron. How about yourself?
I'm doing great. So you just came back from the Big Apple, the big city. How was it?
I was in New York yesterday. Beautiful weather. Running around trying to hustle up some deals. The most interesting meeting that I have is we went to Daily Mail.
Okay.
Website. It's like the clickiest website in the world. It's amazing.
Yeah, the headlines are amazing.
Their newsroom is so intense. Like, it made me contemplate how we're operating the Benzinga newsroom.
Okay. Yeah, I think it's always interesting to see go in and see those things, and then like you have these takeaways, and you're like, okay, like I saw how they operate, and you come back into our office and you're like, all right, what are we doing differently?
That's it. Like they update their homepage on average every 3 minutes.
Wow. Do you want to I have a quick story about kind of like that reminded me of that before we get into our next guest interview. So do you remember Carson Palmer, who played quarterback for the Bengals back in the day?
Sort of.
So I was listening to an interview on a podcast, and he said that on an off day, him and Chad Ochocinco, the wide receiver for the Bengals, took a road trip to Indianapolis to watch a Colts game, like on a Monday night with Peyton Manning and like Marvin Harrison and their receivers, not to watch what they were doing on the field, but watched what they were doing like in the huddles when the defense was on the field, seeing like how they were interacting, were they like looking at their like playbooks, where they because like they didn't know, they were like, what are they doing that we're not doing behind the scenes, essentially. So not like on the field, but just on the sidelines.
Yeah. All right.
Thought that was interesting.
I take it.
Wait, real quick. Can you talk again in the mic?
Yeah. Check.
I don't know. Can you guys hear Luke in the chat? Give me a 1 in the chat if you can hear Luke. Give me a 2 if you cannot. Jesse's saying it's moist season out here in the D.
Tesla.
Nitin, I don't know how to say that name. Nitin wants to talk Tesla.
Oh, here, let me talk to David, okay?
Okay. 2. Jesse's saying he can't hear you, though. I can't hear you in these headphones. You want to take this seat?
Yeah.
All right.
Let's roll the intro and let me talk to David.
Okay. We're going to be bringing on CEO of CarParts.com, David Meniane, right here after the intro.
All right. We're going to talk about a stock that we've had on this show consistently. Last several quarters has come on with us. Like to welcome David Meniane, CEO CarParts.com, ticker PRTS, onto the stream with us. David, how are we doing today?
What's going on, Luke? Good to see you, brother.
Good to see you as well. Your background's a little different. You have a wheel or a hubcap in the background. I'm not sure which.
We got to switch it up, man.
All right. Is it like a special wheel, or is it just like you needed a wheel?
No, we just needed some auto parts. We're an e-commerce company, but also selling auto parts. So we just have to make the background look cool.
I get it. You're not selling bricks. You're not selling fake plants. You got to get an auto part in there.
And we're not
Fair
a
enough.
drop ship business. So, we're a stock ship business. We buy auto parts, we stock them, and we ship them to customers. So that's the business.
There we go. I want to do something a little bit different this time around, David. The last couple times we got pretty deep into the quarters, going through the numbers. What I want to do this time is let's bring people up to speed on the car parts business. So I'm going to walk you through, if you'll be so kind, a series of questions that are going to be higher level about the business, about the addressable market, etc. And then last but not least, we'll get a little bit deeper into it. Does that work?
That works. Whatever you want to talk about.
All righty, sir. So first things first, give me the lowdown. Tell us what CarParts.com is, what the problem you're trying to solve is, and then next we'll go to an addressable market.
Sure. So CarParts.com is a direct-to-consumer retailer of auto parts. So we sell parts and accessories direct-to-consumer. What makes our business very unique is that we globally source our parts, we store them in our distribution centers, and then we ship them directly to consumers. And so what that allows us to do is have high-quality products at very competitive prices because of the two-step distribution model. In terms of size, we've been around for 25 years. We have 5 fulfillment centers, 1.2 million square feet of space. We have 1,700 employees. And over the last 4 years, we more than doubled our revenue and more than quadrupled our profitability. So last year was a record year for us, $660 million in revenue and about $25 million of adjusted EBITDA. And today, as of the last quarter, we have close to $50 million in cash on our balance sheet. We have over $100 million of inventory, and we have virtually no debt.
Okay, so let me ask this one: who are the competitors, right? Who are consumers choosing when they're not choosing you? And why is CarParts.com a better solution? Why should they choose you?
Sure. I think our main competitors in terms of share of wallet are our brick and mortar cousins. There's a lot of big players out there that have thousands of stores and sell auto parts directly to consumers and also to professional mechanics. And so what we're trying to do is offer the same parts, the same catalog at a much lower price. So we sell the same parts, except that our distribution model is much shorter. And instead of having 3 or 4 steps, we got 2 steps. So that allows us to be a lot more competitive and ship direct to consumer. So, if the customer is willing to wait a day or 2 for their parts, they can usually save 30, 40, sometimes 50% on their purchase for the same parts.
Okay, so I was going to ask what the price differential is. You gave a 30-40% number. What about time to receive a part? What does that look like?
Yeah, time to receive a part, depending on the job, usually it's anywhere from 1 day to 3 or 4 days. And then we offer customers options to ship expedited or overnight. So if you have an emergency job and you really need the part, we can offer a solution for that. The other thing, and what we've been really investing in over the last couple of years, is getting closer to customers. So today we have a footprint on the West Coast, in Texas, in the Midwest, in the Northeast, and in the Southeast. And over time, what you're going to see is those delivery times getting shorter and shorter. So if you think of this big total addressable market, how do we capture a bigger slice of it? Well, over time, we want to be closer to the customers.
And you mentioned the $660 million revenue number. How big is the market? How big can that figure get?
The number can get much, much bigger. The total addressable market is over $300 billion. There's 300 million cars on the road in the United States. And those cars are getting older. The number of miles driven by American consumers goes up every year. So there's more cars. They stay on the road longer. People drive more. And so that market is expanding. Now, what's interesting about auto parts in general is, unlike some of the other industries like apparel, electronics, the online penetration, the percentage of purchases that is made online is very high in other industries. For auto parts, it's less than 5%. So I think the opportunity is the total addressable market is going to get bigger, and companies like us at carparts.com, we can capture a bigger slice.
And so, I mean, let's get into the burning question a little bit. Maybe the hard question, right? The stock is at $5. Why do you think that is? Trending lower, sideways over the past couple years. What I think the market would need to see is they need to see a big sales number increase. Margins are a top concern as well. But give us your take from the company.
I think taking a step back, if you look at the stock price, 4 years ago, when our management team joined the company, we were trading at 97 cents. And today, we're 400 or 500% higher than that. Now, to your point, our stock price got, definitely beat up over the last couple of years. We went all the way up to $22. I think e-commerce companies got beat up. I think small cap companies got beat up. I think in this environment, the macro is putting a lot of pressure on the stock market. I think, capital allocators, institutional investors are really focusing on some of the Apples and the Microsoft and the Facebook and not taking any risk. I do think that our business is unique in that, we have a very solid balance sheet. We're growing. We're free cash flow positive. We have virtually no debt. The total addressable market is gigantic. And we have a lot of capabilities that we've been investing in over the last couple of years. So, in my personal opinion, the stock is significantly undervalued. And I think that over time, the stock price is going to reflect the value of the business that we're building, which I think we're building an exceptional business that's going to be extremely valuable over the long term.
And my opinion, David, as I said, is I think that sales increase is what the market needs to see. Do you think that's fair?
I think over time you need both. You need profitable growth. So you need top line increases, and you need to show operating margins, and you need to show free cash flow, and you need to show that you can grow the top line and the bottom line. I think historically a lot of these e-commerce companies were so focused on the top line that they forgot to be profitable. For us, we're profitable, but to your point, I think investors want both. They want a balance of growth and profitability, and that's what we're working on. That's a big pivot that we made, last year. And if you look at our adjusted EBITDA in 2021, we had 16 million, and then we delivered, 25 million in 2022, and that's up from 4 million in 2019. So we've shown top line growth, we've shown bottom line growth, but the saying is, what have you done for me lately? So over the next couple of years, the main focus is going to be disciplined growth, profitable growth.
All right. And I've asked you this one many times in the past. Number one item you're most excited for?
The number one item I'm most excited for is our Jacksonville footprint. We just opened a DC last year. We're much closer to our customers in the Southeast. Today, we can service about 12% of the American population in 1 day transit time. It was a big investment for us, 180,000 square feet. It was very successful. It took time to ramp up, but today it's operating at full throughput, and I'm very excited.
Awesome. David, appreciate you joining us. I've been a shareholder for a while now, probably more than a year at this point. 2 years, I don't know. But I think the story is exciting, and that's why I like having you on here, and I appreciate you doing a little bit of the step back to walk through the business, and then get into the future.
Thanks for sticking with us, Luke.
Absolutely. Are you going to say it?
I am going to say it. PRTS to the moon.
There we go. Thanks, man.
See you later, man. Peace.
All right. How about that? It's a stock that I certainly find interesting. The addressable market is the piece that always gets me, as I've talked about in the past. It's still such a small portion of car parts that are sold digitally. It trails other categories significantly. And I have a thesis on the space. As I mentioned with David, the sales growth is the piece that I think that the market needs to see to get any serious follow through on the stock. And we'll stay tuned. We will keep you all abreast of the story. Producer AB, what do we have coming up next, sir? He's coming around.
Sorry, that mic is still turned off. Coming up next, we're going to be talking to Mr. Robert Roy, some options, some Fibonacci's, as always with Mr. Roy, and then we'll end the show at 1 p.m. Mitch will be live later at 3 p.m. with some swing trading. So make sure to stick around there if you're interested in swing trading. Luke, any other stock calls before you leave? Well, I got you.
That's all I got for now.
Okay.
But I do want to do something special tomorrow. Let's talk about it after, okay?
Okay. Let's talk about it tomorrow. Deal.
All right.
Everybody smash the like for Mr. Hot Stocks Luke joining us today. Luke and AB have been kind of the mobile travel guys recently. We were in New Orleans, we were in New York. Where will we be next? You never know. We might have to do a live broadcast location from a remote location at some point coming up. Where is AB on the show? We actually did some yesterday. We're gonna have to do some more now that it's getting nicer out. What is their best-selling item? That's a good question. I mean, so my thing with car parts is, and I've talked about this before, is just that I think there's this hurdle of I think honestly less and less people know how to do things on their own car. So like I would think something that's really easy, for example, like popping in a headlight or something like that would be a good thing from car parts as like one of their most popular items, just because it's a lot easier for a customer to like order a headlight and pop it in than if you need to replace a muffler or something like that. Sorry guys, just checking up on my trades real quick. I'm kind of feeling some I usually don't say this, but I'm kind of feeling some puts right now on the SPY. Let me check and see if we've got anything teed up. Google would like to use your current location. Sure, Google, you can have my current location. I don't care. Got nothing to hide. Anything tomorrow? Looks like nothing's super big. Import price index minus fuel. CPI came in line. How much Amex paying? Oh, and their high yield savings account? I didn't see. I have an Amex credit card. I don't have any other accounts at Amex. All right, I just got word from Rob. I think we're just gonna have to start back up next week with Rob. He's got some scheduling conflicts, so we'll go ahead and wrap up Benzinga Live today. Again, we'll be live with swing trading this afternoon, Mitch, and then Luke and I are going to do something special tomorrow on the live stream, so make sure you guys stay tuned for that. Luke and AB, you do not want to miss out on that. Till then, make sure to stay green. Peace and love, y'all.